Good morning. We've been having some technical problems so that we're late, and we started off with a previous version of today's program, and somehow in the middle, everything went down. Well, let's start. The NASDAQ continues leading indices down as the Russell straddles the zero. The major culprits were tech stocks for the former, energy and banks propping up the latter. And of course, Dallas Fed head Kaplan's declaration that the Federal Reserve will probably hike rates this coming 2022. More and more hedge funds are reportedly buying into SPACs, according to Reuters, while offloading some excellent performers from Q1. Make what you will of that, but SPACs are not popular in Europe. The dollar is down after New York's Empire Manufacturing Index came down 2 points in May to 24.3. Not quite as bad as expected, and the 6-month bill auctioned off with a yield that's down 0.005%. The loonie is nicely up despite a 70K drop in housing starts, 268.6 thousand this past month. U.S. and Canadian trade ministers Kathy Tai and Mary Ng have launched talks on digital service taxes, supply chains, and lumber tariffs. We're looking here at an extremely long-term chart for the US-Canadian dollar. It shows we've just hit a 5-year low. The question is, does history count for anything? The hourly chart shows us an oversold RSI, hesitating, and a MACD that's aiming to break above its signal. We're really far below the moving average, so we're asking if a slingshot return can move us far enough above to bring us back to normal. At 12:30 we're expecting some construction data alongside the Red Book Institute's report on same-store sales growth. Then nothing till Wednesday afternoon with CPIs from Canada, mortgages from the US. Major European markets closed between 0.25% and 0.13% down yesterday as smaller states managed to actually climb. Portugal up nearly 1%, Austria and Switzerland about 1/5. The euro is marginally up after Italian consumer inflation improved ever so slightly, up 3 ticks to 1.1% in April, and French short-term yields regressed a fraction. The pound is up nicely after unemployment this morning came down 1/10 to 4.8% in March. In Brussels, officials are pleased with an agreement not to escalate tariff wars with the U.S. while addressing China's market floods. U.S. whiskey and Harleys will apparently not be EU tax doubled for the moment. In about 2 hours, we'll be getting a preliminary reading for the union's GDP trade balance and employment data. Most Asian equities are relatively up this morning, save the Shenzhen Composite, which is down about 0.25%. The Nikkei jumped a full 600 points, and the yen stumbled a tad after preliminary data shows the nation's GDP contracting by 5% in Q1. Last year's final quarter delivered an 11.6% expansion, if you'd like to remember. The Aussie continues enjoying the warmth of its central bank minutes last night, ensuring investors that the present 10% interest rate would hold until 2024. And after midnight, look out for Australian consumer sentiment and wage prices. Then about 3 hours later, industrial production in Japan. Nearly all major cryptos are back in the green again this morning. At the end of that sell-off has gold hitting strong resistance at 1870, and it's simply not gaining traction. We can see that a year ago that level served as a pretty steady support and more, and then the final retracement peak on the way down again at year's start. Still, with U.S. equities down yesterday, we should wait for today's New York Open to see if we breach resistance. Also, that greenish tinge in cryptos could possibly just be profit-taking amongst short traders. Oil continues up this morning as optimism rules over pessimism, and so with nothing better to guide us than sentiment, there's a good chance that winding channel will hold for now below the 6660 resistance line. We haven't been above it since October 2019, and there's nothing dramatic enough to send us above it now. We'll be seeing the API's report on U.S. oil inventories at 8:30 tonight GMT. MarketWatch tells us that Amazon is eyeing MGM to bolster its own streaming library. The Hollywood icon could go for $7 to $10 billion, which is kind of sad. Ryanair managed to pull out better than expected £64 loss per share this past Q1. Also a last flurry of earnings from the US as retail takes over. We're getting reports from Walmart and Home Depot, both relative beneficiaries of the COVID lockdown environment, and Macy's, not so much so. Then there's Vodafone and Playtech in the UK. Barron's has a lot of respect for Macy's, a department store that's managed to add $43 since year's start with its ability to rejuvenate its offerings thanks to pride of place and scale. Less surprising will probably be Home Depot, which during lockdown received special consideration as a required business. Here we see that stocks are a tad underpriced and the company is expected to show a 44% improvement in earnings. Like we said, turbulence, but that's a good thing, right? You just got to know how to skip the waves. Have a great day.